All right, guys. Thanks for joining me again today. We have been asked by some fellow attendees to go over FIFO inventory valuation today. So FIFO is part of the QuickBooks Enterprise Platinum or Diamond editions. So we'll talk about how to see if you have those versions of QuickBooks Enterprise on your license here in a second. Give everybody just a quick minute to get logged in. I'm Marjorie. I'm the CEO of Fourlane. I love doing these courses. I apologize for my voice a little bit today. We have had the whole country's had some crazy weather, right? Okay. Hopefully I won't have to clear my throat too much. All right, let's get started. So just a reminder, if I go too quickly today, or if you want to come back and watch any of our videos that we've done before, you can go to our YouTube channel, youtube.com/Fourlane. There are just a ton of videos up there as well. Some of them may be repeats for what we're doing today. Every time we do these sessions, though, there's always something new that we stumble on. So that's why we do them every couple of years, repeat. FIFO's been part of the QuickBooks product line for a couple of years now. And then as always, we do have a Facebook group, Fourlane QuickBooks Enterprise Facebook group, where people post some questions every once in a while. Not too much activity in there. I'd love to see some more. I like to know what people want to be trained on. I'm very creative usually, but I'm running out of ideas. So I love that somebody asked for this training today, because it makes it a little bit easier. If I have, obviously answering a question, solving a problem makes it easier than just dreaming up the problem. So. And then, as always, if you are done with calling QuickBooks support, you can always use Fourlane support for QuickBooks. So just want to throw that out there for those who are over calling QuickBooks support. Okay, so we're going to talk about FIFO inventory valuation today. So I'm going to spend most of the time in product as always. I don't like spending time in the slide decks. I just wanted to give you this little bit of words here. So we're talking about inventory valuation. A lot of people hear FIFO and they think picking, right? I want the system to tell me which lot numbers or which serial numbers to pick first. That's not what this is. We have written custom programs for customers who need that, right? So basically what happens is in a sales order, you enter your sales order, you hit save, then our little custom program will go over behind the scenes, figure out based on whatever criteria we've decided with you all, and it will grab the lot number or serial numbers that you're supposed to pick and throw that on the sales order. Okay, that is not something that's happening natural in QuickBooks. This is inventory valuation method. So we talk about inventory valuation method. The reason that you would use like a FIFO versus using an average cost, which is the other valuation method that QuickBooks does, is because you have fluctuations to cost, right? So when you are doing inventory valuation under FIFO, you buy something for $500, then 2 weeks later you buy the same item in your QuickBooks file, right? Same SKU for $100. Okay, you want to, when you sell one, you want to take that $500 hit as fast as possible, right? Because expenses are good. Cost of goods sold is good. That means we have write-offs. That means we have less taxes to pay, right? So some industries will see that where they have huge fluctuations in item costs. And so we will see them do FIFO inventory valuation. Now, this is not something that you can do just, this year, this month. This is something that you have to declare with the IRS. You have to talk to your CPA about. It is a formal process to go through to change your inventory valuation method. Okay, so again, I see a lot of people just like flip this on in product. That's not what this is about. This is a very formal thing, and you have to be consistent with it, right? So you can't just, as I was saying, you can't just this month, we're going to go FIFO. Next month, we're going to go average. That's not how it works. Most companies It is a major overhaul to change their inventory valuation method. And then once they change it, they don't change it again, right? You're not going back and forth, okay? There are other inventory valuation methods. There's stated, there's LIFO, last in, first out. But the only one that Intuit does, or that QuickBooks is going to do for you, is average cost, which is all products that QuickBooks have, and then, well, online does FIFO, and then FIFO, okay? All right, let's get in products. Okay, so the first thing we're going to talk about is how do we turn this on. So under Edit and Preferences, we have our items in inventory, and we come to our company preferences. Now in QuickBooks, they don't really have a nice way to learn what subscription you are on in product. But if you have this Advanced Inventory Settings button and it is not grayed out, then you probably have Platinum or Diamond. So that's just the easiest way to know. Of course, if you need us to look up and tell you, we maintain our clients' licenses that they have, right? Because we help you guys renew them every year. So inside of here, it is just a tab, FIFO, and is literally a checkbox. Now, I'm not going to check it yet, okay, because I want to show you some of the things ahead of time that we can expect when we turn on FIFO. All right, so first thing we're going to look at, we're going to take a look at our company financial profit and loss standard report. I'm just going to run it for all time and collapse down my rows so I can see just that bottom line number is 164,857. So usually I like to grab screenshots, but because, let's see, let's grab a screenshot just for fun. Okay, so new. Grab a screenshot of this. Anytime we're making changes, print them out. Doing this and undoing it, you're not going to see. It's very, it's a big deal to turn the inventory valuation method on or to change your inventory valuation, but it's not a big deal to make the change in product. So it's kind of strange. Okay, so here's our profit and loss. The other one I'm going to take a look at is I'm going to take a look at our inventory valuation summary report and just leave it as of right now. Okay, so new, and what I'm looking at on this report is I'm seeing what is that asset value. So I just pasted these onto a Word document on my other screen so we can compare. All right, let's go ahead and turn this on. Edit and Preferences, Items Inventory, go to Company Preferences, over to FIFO, and we're going to say start using FIFO. Now notice that there's a date in here. Generally, when people turn on FIFO, it is at the start of their year, right? Start using FIFO inventory on January 1st, 2020. That's what it usually is, okay? So you normally wouldn't see like a random date in here. Maybe 11/30 if that's your year end. So we just flip a switch, that's it, say okay. Doesn't do anything yet. You say okay again. It says I must close all my windows. Now it literally will go back to that date, and from that date forward, it will change your inventory valuation method. Okay. Now what does that mean? What is that affecting? When we're talking about inventory valuation, we're talking about the assets. So what is the value of my assets that are sitting on my balance sheet? And then it is talking about what are my cost of goods sold, right? Because that, when we remove it from an asset, when we credit the asset, we debit the cost of goods sold on the invoice. So those two accounts should be the most affected by this change. So let's take a look first at our profit and loss standard. Run it for all time. So we have the same, collapse some rows down. Okay, now notice on our page before, right, we had 164,857. Now this is a sample file, so it has really very little data in it, let's be clear. So this is not a huge swing. It's not a material difference for what most people would think, but it is different, right? That's my point. So 164,857, bottom line, 162,853. If we look at our cost of goods sold, 246,691. In here, we look at our cost of goods sold, $248,695, right? So you can see where there's differences. If we look in other areas, right, income $668,194, not changing. Expenses shouldn't change, $257,302.84, right? Because expenses should have nothing to do with inventory. Now, we do have a video on internal, or I don't think we've done it yet, but it's coming up on internal inventories, tracking things like office supplies. And if you do use our method for that and you turn on FIFO, it will affect your expenses for office supplies. Okay, so nothing else changed, just cost of goods sold. And of course, the bottom line then. And that's what we would expect. Okay. Second thing, as I was talking about, is our asset value. So we come into our inventory valuation summary report, and we just leave it on the date that it runs on. So it's 44,988. This one's super tiny on here, sorry. Zoom in, is 46,993. Okay. And so those two, the differences between those two should be the same, right? It went from the asset account and moved to the cost of goods sold account. Okay, they should be the same. It should balance, is what I'm saying, right? It should balance. And of course, I could do the math for you guys right now, but I don't need to prove myself for that. So here's what we're going to do. We're going to take a look at what does the journey look like. All right. So first of all, I'm going to pull up this cabinet pulls because this is one of the ones that changed. And we pull up the cabinet pulls. I'm going to look at it for all time, and I'm just going to talk you through what's happening. Right. So initially, we sold 6 on an invoice, which is not great. It's not great to have a sale first. You shouldn't be selling the product before you buy it. We talked about this on another video. So sold 6, bought 300 at $3 each. Okay, so as you've seen in other videos, when this happens where I buy it after the fact, it will go back and update my cost of goods sold if that's not what was on the item at the point of selling it ahead of time. Now, the other thing to notice about these reports, even though I have FIFO turned on, it is not going to do FIFO inventory valuation in my calculated average column. It is still going to do and show and reflect calculated average. Where the FIFO inventory valuation part comes in is when you actually open up the invoice. Okay? That's when the inventory valuation fluctuates. When you, well, in this case you wouldn't, but you might see fluctuation. Okay? So, and this is what I want to compare. So on here, sold 2, bought 300 for $3 each. I sold a couple more, right? So not enough to get me to 300. If I look at this one, if I double click on this invoice, and we're talking about the cabinet pulls, and I look behind the scenes at my transaction journal at cabinet pulls, you can see my cost of goods sold is debiting for $12. Shows here that I sold 4, so it's valuing it at $3 each, which on my inventory valuation detail, it says average cost is $3 each and FIFO cost is $3 each. Okay. Now I come in here and I buy some. These ones I bought, it threw my average cost down, right? Average cost is all over the place coming down here. Now the next time I sold them again is down here, which because I haven't reached my 300 yet, right? So I sold 12, an additional 17, additional 4. Now I sold 26 more. So if I were using average costing, the cost of this invoice for selling these cabinet pulls would take the 253 times 26. Okay. Now, when I look at this invoice, though, because we have FIFO turned on, come down to cabinet pulls here, it's 78, right? Which is 26 times 3. So even though the average price is calculating on here, calculated average is showing us on here, this is just a math column, saying how many are on hand, what's the asset? Asset divided by how many on hand. That's why this column's on here. Okay, but on the actual transaction, it is still valuing this inventory. When I pick up the cost of this inventory on this invoice, it is valuing it at the $3 average because that's how many I've sold. Okay. Now, once I get rid of all of these 300, then the next inventory valuation that it's going to start to pick up is $1.59 because that's how many I bought these 48 for. So it has to get rid of those entire 300 first at $3 each, and then it'll start to poke away or relieve these 48 at $1.59 each. Okay, hopefully that makes sense. I'm gonna pause for a second here and see the next one that we're going to look at. The thing that we're going to look at is we're going to look at what happens when you do an inventory adjustment. Okay, because QuickBooks is well, actually, first, let me just show you this first. One thing, too, just to be aware of, I'm just going to close out of all my screens so I don't get lost. I always tend to get lost. One thing, too, that you can see is that you can go to your custom transaction detail report. You can run it for all time, and you can filter for item, right, a specific item of cabinet pulls. And you can see the debits and credits. You can also filter this down by cost of goods sold, I'm sorry, by account of cost of goods sold, if that's where it's hitting, and just see that side. So I can see again, right, $3, well, let me add on quantity to this because quantity is in a natural column. So I have 6, $3 each, 6, $3 each, 17, $3 each, 4, $3 each, 26, $3. You can see it when you are running this report, what the actual costs are that are being pulled out. Okay. And what's the offset to this transaction? That 78 is hitting cost of goods sold as a debit. It's crediting the asset account for $78 also. So this is a good report to just have awareness of. Okay. All right, so let's take a look at a different item. We're going to go into our inventory valuation summary. And I'm going to take a look at these exterior doors. Okay, so same thing, run it for all time. So in this one, we bought it first, bought three, looks like 105 each because the calculated average stayed the same. So we have 6. Then we sold 1, 2, 3, 4, 5, all at $105 each. Okay. And then we sold 6. It's still going to pick up that $105 even though it's taking us negative because it doesn't know what else to do except for just pick up history. So let's say I wanted to clean this up and realize, oh, you know what? Well, I couldn't have sold those 6 because I didn't have enough quantity on hand. So I must have had, you know, it's year end of 2022 and somehow we went out and counted and we actually have more than 2 of these on hand. We have 10 of them on hand at the end of 12/31/2022. Okay. So when that happens, what do we usually do? We go in and we do an inventory adjustment, right? If you do cycle counts, that turns into an inventory adjustment. But the problem with inventory adjustments is when I go in here, and we're going to do it, when I do quantity and value, right? If you're ever doing an inventory adjustment, always do quantity and value because you want to see both. You want to see what is happening with your item. Also, the adjustment account should never be inventory asset because that's saying like adjust the inventory down, right? Credit my inventory and debit the inventory account. Doesn't really make sense. So it should go to some kind of loss or offset cost of goods sold or something like that. We do talk about that in the inventory cleanup video that we have. And I already forgot which item we're talking about. The wood door exterior. Okay. So I come in here to the exterior wood door, and I need to change this, right? 12/31/2022 is what we're talking about, because right now it's showing me I have 96 on hand, because it's showing me how many I have on hand as of the date that was reflected there. Now, when I go to 12/31/2022, I have 2 on hand, which is what we actually expect to see, right? Okay. Now, if I say my new quantity is 10, it's going to quantity difference 8. My new value, I'm going to change. So I'm going to change this to be 2,000. Now, this is not the value. This is not the value of those 8. This is the value of the 10, right? When it says new value, it's saying how many quantity and what's the value of all of those quantity. Okay, so it's going to take me to an average of $200 each. Now, this is not, in the QuickBooks space, this is not considered a receipt transaction. So this is going to reset your FIFO. And instead of saying, oh, I have 2 on hand at 105 each, and then 8 additional on hand at 200 each, you are telling the system I have 10 on hand with an average value of 200 each. If I wanted it to be different than this, I would have to say, I now have 2 on hand, right, at $105 or leave it $105 each. And then I'd have to receive it indifferently. So doing it this way, let's just take a look at it, and then I will delete it. My inventory adjustment comes in here. So I have 10 now, right, on hand, $200 each on value. And when I look at that next invoice, which was 105, and it should be 105 because, look, if I have FIFO 65432, right, this invoice should still be at 105 valuation. But when I come in and look at my transaction journal, because of that inventory adjustment, it values at $200. So inventory adjustment moves all the inventory on hand to that value. Okay, so awareness is key. So what do we do instead? We get rid of that, first of all. Because what the system is expecting to see for FIFO is some kind of bill, item receipt, check, something like that. You can use any of those. A lot of times we'll do checks or bills, $0 bills. So I'm just going to do it as a $0 bill. I usually create a vendor that's called ZZ Inventory Adjustments, right? Because you have to have a vendor in there, and it just allows me to run through and spot check and make sure these are all 0. Again, we're going to do 12/31/2022. If you want to put some reference number in there, it's not required. The amount due, you leave as 0, okay? Because this, in an inventory adjustment, what are we adjusting? What do we talk about? We said we are adjusting cost of goods sold and asset, right? So we're just going to do the same thing here. So I'm going to come in down to my items, and I'm going to say exterior. I'm going to receive in 8 more, right, to get me to a quantity of 10 at $200 each. And ignore all the pop-ups. Now on the other side, because if I just left this like this, it would put a bill in and it would expect some accounts payable, right? On the other side, on the expenses tab, I can instead come in and go straight to cost of goods sold and say negative 1,600. And you can put in here, right, to adjust inventory for exterior, blah, 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 blah. I'm going to say save. All right, now let's go look at that detail. Oops, sorry, here. Well, maybe here. Okay, yeah, here we go. So now I have 305, 305, right? 105, 105. This is all average. I can bring in the 8 at $1,600 each. It brings the average to 181. This next invoice, 189, right? So let's take a look at what happens now. If I come into my transaction journal now, look at what happens. It has changed the cost of goods sold now to be 105, which is in FIFO inventory valuation what it should be, because I have 6, 5, 4, 3, 2, 1. And they all should be picking up the value, right, of the 6 that I bought up here, which was 105 each. So it does it correctly because I did it as a bill, a $0 bill, instead of as an inventory adjustment. Okay, so you just want to have awareness. Now there are some ways, there are some ways for us to paste in this information a lot easier. So you'll see in some of our other videos, we have like a never negative one where we talk about coming in and using the accountant's toolbox to batch enter transactions. You can batch enter credit card charges as an example. Boom, pop them all in here. Customize the column, add in the item, pop them all in here, and then do one adjustment out of the credit card account into the cost of goods sold account. Okay, so there's some little hacks that you can use inside of QuickBooks to make it so that you don't have to enter a bill for every single one or enter it manually for every single one. Okay, because if we had on this bill as an example, if we were also adjusting interior, we had 6 of these at $34 each, right? We wouldn't do 2 lines to cost of goods sold. We would just do 1, like it would show up on an inventory, on an adjustment screen. Okay, so there are some little hacks there. All right. So again, whenever we're talking about doing this inventory valuation, you definitely want to talk to your CPA first. It is usually something when we are working with our clients and people want to make this change, that we bring their CPA in, because we don't do taxes here at Fourlane. So we rely on the legal experts over there, the tax law experts over there, to make sure that they're guiding you in the right direction. Okay. And then again, I just want to reiterate, when we look at our home screen here, we talk about sales orders. A lot of people, what they're actually wanting, when they say I want first in, first out, most of our clients that say that, this is not an inventory valuation method we see very frequently. Most of our clients, what they're looking for is they're looking for first out, first in, first out picking. I want to know what is my oldest lot number and pick from that oldest lot number. I want to be told which serial number I should draw from. I don't really like serial numbers in QuickBooks, but I want to be told which items to pick. So that is not what this is. We can do that. That would be something custom, but that is not what this inventory valuation method is. Okay, I think that's all I got for you guys today. Coming up, some future courses. Got retainage to talk about, multiple warehouses, barcodes, lot numbers. The fixed negative inventory, I think that might have already happened. And then, outsourcing manufacturing labor. If you guys have any ideas, again, on courses that you want to see, topics that you need help with, please just shoot it over to me. Stick it in the notes real quick. If you had any questions today and I did not get to them, I will definitely follow up after the meeting, or somebody from our sales team will follow up after the meeting as well to set up a consult with you guys. We do consultations with some of our partners, but hopefully you guys were able to take away some stuff today. All right, everybody, that's all I got for you. I hope you guys have a great rest of your week. Thank you.